Next stock on our radar is Suryodaya Small Finance Bank, and the stock is higher in trade today on the back of what looks like a pretty good set of numbers for the quarter gone by. Results were also aided by other income, which was up almost 300% over last year. Assets under management were up 24% year on year. We have with us Mr. Bhaskar Babu Ramachandran, Managing Director and Chief Executive Officer at Suryodaya Small Finance Bank. Thank you very much, sir, for joining in. So it seems to be a good quarter because you have shown growth and you've shown improvement in asset quality, and I think margins are also looking pretty robust. So let's start with the growth question first. As I see the AUM, I mean, it's not only up 24% year on year, but there's a 4% sequential growth as well. So what are the lending trends now? How is your MFI book looking? And, what's the kind of loan growth you're hoping to do for the whole year?
Thank you. We are looking at growing by approximately 30% on the asset side during the year, little more than 30. On the deposit side, growth will be higher. Catch up with the credit deposit ratio is a little higher. So that will be closer to around 40% to 40% growth as far as deposits are concerned. So we are pretty confident of maintaining that momentum quarter on quarter and build upon the performance that we have been delivering in the last couple of quarters.
What about your net interest margins? They're still in the double-digit mark, but I remember in a previous conversation you had indicated that NIMs will compress going ahead because you will be lending more to, via the secured way where the yields are lower. You're looking to increase the secured portion of your book versus the unsecured portion. So what's the outlook on net interest margin near term and even long term when you get that secured unsecured book to 50-50?
Currently, we are focusing in terms of maintaining it around close to 10%, which is what we have been having for the last couple of quarters. Here and there, take 10 basis points. We'll continue to have 10% at this ratio. As the ratio of the retail assets goes up, the operating cost leverage also will kick in. To that extent, we're fairly confident that we'll maintain it around closer to 10% in the couple of next quarters. Do not see a large compression at all on that.
Okay, so for FY24, NIM should stay at 10%.
10%.
For the whole of FY.
Okay, sir, thanks for joining us. Another question I want to ask you is on the customer acquisition, because that's looking very strong. Even sequentially, it's up around 5%. Do you expect that to, continue this kind of solid growth in the customer acquisition? And on the AUM, can you tell us what part of, your business do you really expect will drive the AUM going forward?
So we're fairly confident in terms of our target for increasing the customer base approximately 20%, with asset growth will be 30%. So we have been on track in Q1 and we are expanding our branches. We are on close to 100 branches in the next couple of quarters. Probably mostly will be accelerated upfront in Q2 and Q3. So that will lead to an increase in customer acquisition numbers as well. In terms of portfolio mix, we'll continue to broadly stay around 60% in terms of our core segment, which is inclusive finance, which is back on track in terms of growth. We aren't really increasing the ticket size substantially, except that we are focusing in terms of Vikas Loan product, which is an individual loan to the customer, which will enable us to really have a far more stickier relationship with the customer household than dealing them only as part of the JAG group. So 60 to 40 is what we are guided, and we stay there at this point of time.
As you look to increase your customer base, is there going to be any big change in the average ticket size of your loans?
No, it will be nominal. It will be around 10% on a year-on-year basis. And now with the new MFI guidelines, which really talks about in terms of looking at the household as a whole than just the customer, there is a greater visibility into the data of the customer as a household at a level, and probably we'll kind of graduate them or kind of, I wouldn't say cross-sell, but enable delivery of other products, which is like an affordable home loan, small ticket affordable home loan, which is around 10 lakhs or small commercial vehicle. So intent is to really grow the relationship value of the customer rather than just increase the ticket sizes of the inclusive finance.
Okay, and on the asset quality, could you give us some kind of outlook on what you're expecting on that front? And also, will slippages stay at these levels, or do you expect some change on that front?
We expect slippages to marginally improve, be better than what we saw in the Q1 as we go forward. We see a good traction in terms of customers who have not even paid for a couple of quarters coming back and paying to get back on, clear up their credit history. So we do not see any large increases than what we are seeing now, probably a reduction.
What about on the asset quality? If your slippages are going to improve, do you think you will be able to bring your gross NPA ratio below 3%?
Yeah, we are guiding for around closer to 2% by the end of the year.
Currently, it's at 3.04, and you're saying in the next 3 quarters, it comes down to 2%. Okay. One of the factors for that is going to be lower slippages. What else will help you bring it down?
Well, recovery of the current GNP And forward slippages, as you said, will be lower, but more importantly is the recurring back, including from the write-off portfolio.
Okay. All right. We'll leave it on that note, sir. Thank you very much for joining in. So that's Suryodaya Small Finance Bank. Good quarter and looking at growing the book at 30%, deposits even more than that. We'll take a quick break on that note, get you more on the markets in just a bit.